When are gold prices going to see the rally that most investors are expecting at this time? Joining me now is Frank Holmes, CEO of U.S. Global Investors, and I'm David Lynn of Kitco News. Frank, welcome back to the show. It's always a pleasure speaking with you.
Well, thank you. It's great to be with you. Now, I don't understand why some people get so bearish so quickly. Gold and gold stocks are above their 50-day moving average, which is a very positive, constructive 10-week trend. And I think that we're in a very nice rising market. Down, give up a few yards, and then grab another 12 yards. Give up 3 yards, get 10 yards. So that's the type of game we're playing right now in the gold market. So it remains very positive, very constructive. But what really excites me are gold stocks, because this is going to be the third year now, the end of March, and it's going to show great numbers for the past year and for 3 years. And that attracts the generalists. And what's interesting when you look at momentum models or relative strength models in the past week, you see gold stocks populating a lot in the S&P universe of gold stocks. Alamos Gold, Kirkland Lake, against the backdrop of many other companies in America who have had a really challenged quarter because of the coronavirus. Gold stocks are doing well.
That's a great point, Frank. And I've read reports from analysts that have said that gold stocks might actually outperform the bullion, especially during downturns in the markets. What do you think about that?
Well, I think that what's going to happen actually is in a rising stock market, gold stocks are going to have spectacular performance, because one of the key factors that generalists look at are free cash flow. And in the universe of 100 global producers we follow, and last week we talked to 30 CEOs, that they actually will have a great quarter, because even though their production was off a bit, especially like in Quebec, etc., but the price of gold was up, it's basically a wash trade. And a lot of the gold mining companies are going to show free cash flow, like the Barricks and Newmonts have been on a tear, and the generalists buy free cash flow stocks. Whereas the backdrop of the S&P 500, because of the coronavirus, these companies are getting beaten up so bad. Some of them are seeing 70 and 80% drop in revenue, definitely on cash flow, no free cash flow, begging to raise capital. But the gold stocks are in that sweet spot. And so you're going to see the migration of the generalists buying gold stocks for the first time in probably over a decade.
So Frank, what would you advise the generalists who want to be exposed to the stocks? Would you recommend individual stocks or the ETFs? What's better, a basket or individual stocks?
Well, I'm very biased. So I always talk about my Go AU because it's a quant approach and it's outperformed in all our back testing. And yes, back testing is no future guarantee, but I think that what it does is that there are stocks that have free cash flow. Focus on those. Focus on the royalty companies. They're just going to have a superior business model. And if you're going to go small cap, like the Grand Columbias, well, they have free cash flow. They're piling cash. They will outperform. So it's looking at metrics, not drill hole exploration results, things of that nature, but it's growth in revenue, growth in cash flow. They're going to get new bids from the generalists.
Okay, great point. Let's turn now back to gold prices. Just coming in today on Wednesday, prices in the bullion are a little soft, coming in, trading a little bit down on the session, and stocks are up today. What are we seeing in terms of macro forces? Why are risk assets still going up when the economy is not doing well?
Because of the trillions and trillions of dollars of money printing from the helicopters of central bankers, the G20 central bankers, G20 finance ministers. That's a cartel, just like OPEC. It's about synchronization of them all spending money to support the economy. And I think that concept, and seeing that peak gold is behind us now, we're going to see more difficulty in finding new reserves. We're going to find a lot of M&A work that's going to take place. I think that gold prices trade higher, but what you really want to see where gold stocks do well, you need to have like 2002, 3, 4, 5, and 6 and 7. We had rising gold prices and a rising stock market. So I think we're going to go back to that scenario. that now the gold stocks, especially those with discipline, financial discipline, are going to far outperform bullion.
But Frank, some analysts have argued that zero interest rates are now the new norm. And can the markets now adapt to that and potentially not see an inflationary environment which would drive up gold?
Well, that's not really true. I don't think it's not a linear line. When you have negative real interest rates, what is the government willing to pay you to buy their bonds? Whenever that rate is negative, in any country's currency, gold starts to rise because it's easy to print money. It's very difficult to mine an ounce of gold and then refine it, and then marketing and distribution costs. There's real costs there. So we will always have that intrinsic value. But what's really interesting in the capital markets, we see 10-year government bonds less than 1%. Therefore, it should be cheap money around. Actually, the cost of capital is skyrocketing. There is so many companies looking to raise billions of dollars that the hedge funds that are money lenders in the capital markets, what used to get 3%, they're now charging 8 to 9% for very short-term yields and very strong covenants for big S&P 500 stocks and private equity companies, etc. So it may look like there's cheap money, but the real cost of getting a business capital, the cost of debt is very, very expensive right now. And I think that will turn around and make it more difficult for easy gold production coming on site from cheap money.
Last time you were on the show, you mentioned that gold could reach possibly $10,000 before we see the end of the current crisis. Have you updated your view since then?
No, I think last year, as I've mentioned, everyone was surprised that palladium could go from 1,000 to 2,700. And I said, short term, why can't gold do that? Palladium's been in negative supply. And there's only so many years that you can have a deficit supply side that the demand grows at 3% a year and pop, up goes the commodity. And I think we're in that cycle now early of negative gold, and we're going to turn around and see gold pop.
Finally, I want to move on to the love trade. You've talked about the love trade versus the fear trade for gold. And we're seeing, obviously, with the pandemic happening, that many people aren't buying jewelry as much as they used to. Can you see this improving anytime soon?
Well, it's really interesting, the supply lines. The airline industry has to get back up and moving because one of the things about physical gold, why was physical gold at one time more than $100 over the futures market? Well, a big part was there's less flights. There's a drop of something like 90% of the number of flights. And if you want to move a pound of physical gold from New York to London, you could put it on a jet. All of a sudden, those jets aren't around. So you had to go privately. Well, the cost of moving it privately went from $30,000 to $300,000. Therefore, the physical price of gold went up dramatically. So one then has to say, what about supply lines? Where the supply lines are so important. So now we see that China and India, the supply lines contracted greatly, and now they're starting to expand again. We're seeing the PMIs in China pick up, and we're starting to see this sort of go back to work policy in parts of India. So I think that it's just temporary, that this sort of disruption. But what we do see during this negative scenario is physical gold coins. There is big demand, and we're not going to see that physical premium for physical gold drop until the airlines start flying many more people. And I think in the month of May, that's going to be a turning point, in particular the U.S. We are seeing in our Eastern European funds, and when we take a look at our Eastern European fund, that many of the Eastern European countries are going back to work.
Yeah, exactly. And offline, you were saying that your company as well is returning to work or returning to the office in the coming weeks. As the situation improves, can we potentially see a more risk-on appetite for stocks and potentially selling off of gold in the short term?
Yeah, I don't think we're in Ramadan right now, which is usually good for gold. And then we're going to go into getting ready for that summer season. So I think all the stars are aligned for gold to trade higher. Don't get caught up with the short-term blips. They're basically corrections to be able to buy. You're seeing more and more hedge funds buy. You still have mainstream New York media negative on gold and finding reasons, but the street.com, they're been very strong on their gold position. Jimmy Cramer's done a phenomenal job of educating investors on the importance of gold as an asset class and gold stocks, what his favorite gold stocks are. So I think that the smarter people are looking at both bullion and gold stocks, and the mainstream will start coming in a large way in the fall. So any dips, time to load up.
On that point, Frank, Bank of America came out with a report recently predicting $3,000 gold in the next 18 months. And that's huge because we don't see a lot of bullish calls from institutional Wall Street investors. When is it going to, when can you expect the rest of Wall Street to catch up?
It just takes time. Like I mentioned earlier, when the world of stock picking, the generalists look at 3-year numbers, very important. And how are the 3-year numbers looking? And the 1 year is above the 3-year numbers in growth in revenue per share and growth in cash flow per share. Then all of a sudden, those stocks start to shine. And you're seeing gold stocks are starting to now show bigger relative growth in revenue per share and cash flow per share. And when they add that magic sweet factor called free cash flow, the generalists pile in. We've seen that with Barrick and we've seen that with Newmont. And there's a new refocus by senior mining companies on delivering free cash flow, and that will attract a broader, deeper buying, just like 2003, 4, 5, and 6, and 7.
Great thoughts, Frank. Thanks again for being on the show, and stay safe. We'll see you next time.
Thank you, my friend. Thank you.
And thank you for watching Kitco News. We'll have more for you, so stay tuned.